Alrighty, happy Saturday and welcome back to another episode. Today is going to be some bonus content, so if you are viewing this video for the first time or my channel, welcome. If you are new, if you enjoy my content, definitely smash the like button. Don't be lazy if you want to stick around for the long haul. Smash the subscribe button. I put out videos on this channel Monday through Friday when the market's open. However, Saturday, I'm going to start posting a lot of educational content, free content, pretty much anyone out there that is relatively new to the stock market or thinking about getting invested in the stock market or just kind of really learning about it and understanding that it's not a scam. By all means, you can get crushed, especially if you don't know what is going on. But overall, the stock market for me and myself in the last 6 years has really allowed me to break out of the financial matrix that people are in. I am retail. I'm not big money. I'm not Wall Street. Wasn't born into a super wealthy family. Born into very much a medium base income style family. So what has allowed me to really scale in my life financially is really making investments. And today, I kind of really want to do a review on a different YouTube channel that I very much watch. Clear Value Tax. Oh boys, I got some word salad today also. Clear Value Tax. Welcome if you are new. I really don't edit around here because I keep things very much real because I'm a real person, like I said. Not some big Wall Streeter or big, video producing YouTube channel. I have other YouTube channels, and if you are coming from my other YouTube channels as well too, understand that this channel is more than likely very much going to be taking off because the stock market is very unpopular right now. But next year, oh man, it's gonna be a doozy. Oh yes, indeedy. Okay, so Clear Value Tax. I watch this YouTube channel. I'm also subscribed to him as well too. It's ran by a guy named Brian. He is highly successful. He doesn't really talk so much about individual stocks. He does talk about buying the S&P 500. So if you are let me put it this way. If you watch my video from yesterday, fairly long, but I ended up showing my public profile that I made dedicated for this YouTube channel. I am also doing a account challenge to 6 figures, taking a couple 5 figs to 6 figures in the course of 17 months. I'm already up significantly on my profile, so definitely check that video out yesterday. Probably going to be showing my public profile again, maybe Monday or Tuesday, so definitely stick around for that as well. But I dabble in individual companies because I'm not really looking to make a 8-10% return. If you want to play things safe and you just want to buy the S&P 500, sure, I'm not a financial advisor, but do your own due diligence. The S&P 500, it does typically produce anywhere between 7 to 11%. Now, obviously, that could very much be swaying in either direction. The S&P could very well produce you a negative return for a year. It could produce you 6% instead of 7. It could produce you 12% instead of 11. It could even produce you as high as 17.9%. It could produce you 20%. Okay? So there are people that dabble only in major indexes. Is it wrong? Is it bad to do that? Is it wrong to not buy major indexes? Is it wrong to buy major indexes? It comes down to what is your strategy. If you're new to the stock market, the number one thing you should focus on is what is your strategy. Don't try to replicate my strategy. I'm a big tech bull. I'm a fintech bull. I'm a AI build-out hardware and software bull. Software is very much in the gutter right now. Hardware, such as the chips, are very much rock and rolling. But I'm an overall bull around individual companies. And this year, I'm on track to very well make well beyond 6 figures of profits. Between my public and private profile, I have set myself up to very much follow where the money is going. And the money right now is going into very much the chip-related stocks. However, the S&P 500 on the flip side, if I had taken all my money and put it into the S&P 500, well, it's going to produce me a lot less profits. That's one thing about it. But I totally get it. There are a lot of people out there that they just want to work very hard. They don't really want the hassle, and they don't really have the time to really do a lot of research around companies. They don't ignore the noise. I tend to ignore the noise, but they very much follow the noise, such as geopolitical events, what's going on in the economy. So they really just want to play it safe and go into the major indexes, right? Once again, is that your strategy? I actually have a good friend of mine that watches these YouTube videos. He does not dabble in individual stocks. He works hard. He buys the S&P, buys the Qs. He will buy other indexes as well too. I believe he does have the Russell 2000 as well also in his profile, but his profile is literally made up of major indexes. Why does he do that? Because he doesn't want to take the time and hassle to really do a lot of research around individual companies like me. I'm a bachelor. I'm 38 years old. I've sacrificed a lot to get to where I am in life, and one of those things I've really sacrificed is, hey, I don't have time right now to very much have a girlfriend, very much be looking to be married. I'd rather sacrifice my time to very much be listening to conference calls and doing a lot of research when it comes to making investments. It's a trade-off. If you want to very much move up in that aspect, you're going to have to sacrifice some part of your life. And for me, I'm pretty much sacrificing the relationship side of my life, probably for a little bit longer, because the stock market is going to be, it's going to be very interesting over the next 6 to 18 months. Okay, so today's video is going to be all around pretty much the pre-election year and election year data following the S&P 500. So this video was posted last week. I'll go ahead and leave the link down below. I'm not being paid by Clear Value Tax to pretty much, talk about him. I'm just doing a simple video review, and I also have no affiliation with him at all. It would be cool to actually do an interview maybe someday with him, because, I mean, the guy obviously has a lot more experience than me, especially being in the market. And the guy obviously very much dabbles in finance. Me personally, I'm not a financial advisor. I've just done a tremendous amount of due diligence. I've been in the market for over 6+ years, and I've seen a lot of mistakes by people. I've also made a lot of mistakes by myself. One of the biggest mistakes that I've seen from people is getting in, getting out, getting in, getting out. Should I sell all my stocks? Should I get out? I've been in the market since I bought my first stock back in March of 2020. So anyways, this video is basically about midterm election patterns. 98 years of data. That is incredible. Okay, take away Republican and Democrat. Don't worry if it's an R. Don't worry if it's a D. Just think about election, okay? Doesn't matter what political views you are. Just think about the election. Zoom out from the political party nonsense. What is going to make people go out and vote on election day? They got to feel good, or they got to be pissed off. Now, chances are, let's go ahead and use Donald Trump as an example, right? 2028 is going to be a presidential election. He obviously wants another Republican to step in 2028, okay? If it was a Democrat, then the Democrats would want, obviously, a Democrat to go and vote for the Democrats. They don't want the economy and also the stock market to suffer the pre-election year. Next year is going to be a friggin', no pun intended, nightmare, straight up. I really wish that I could just get away from all the political nonsense, and I know so many people are sick of it too. It's like we get maybe 1 year of no political nonsense, and then it just starts up again. We got midterms this year, but then next year, you're going to have people start, like, campaigning to run for president in 2028. Donald Trump, I believe, started his campaign back in 2015, and the presidential election was 2016, was it not? So typically the person running for president, you're going to start to see, like, a lot of politics the end of next year. So the Republican Party, they want everything in the Middle East to be wrapped up relatively soon. Even though that Donald Trump has stated he doesn't care about midterms, that's a load of nonsense, okay? If Joe Biden was still president, well, if Joe Biden said, "Oh, I don't care," that's utterly nonsense, okay? Anyone in, like, the political scene, of course they care about what the economy and the stock market's doing. That's not true. However, understand that they're going to do whatever it takes to try to make people feel good. So they vote for the Republican Party in 2028. Vice versa, if a Democrat was in the White House, the Democrats would want to make people feel good. If they made people feel bad, then the other party is gonna pretty much get in there, right? Now, pre-presidential election, 2027, I was making videos on this channel, or rather I should say I started making videos again on this channel. This YouTube channel has a very weird, like, history around it. I actually started making, I created this channel under an alias back in March of 2024. Made some videos up until the middle of May of 2024. Had some minor health issues, all resolved now, all rock and rolling. And pretty much I reactivated this side project back in November of last year, 2025. And back in December, I was making videos talking about what the Wall Streeters were saying. Wall Streeters with a hell of a lot more money than me. Okay, a hell of a lot more money. I'm a six-figure investor, six-figure trader, whatever you want to call me, climbing my way to 7 figs. My money in the market is nowhere even close to what Wall Streeters have. These Wall Streeters with tens and tens of billions of dollars, hedge fund managers I was watching on CNBC, and they were all like, yeah, 2026 is going to be awesome. Oh, it's going to be awesome. When everyone is saying that the year is going to be bullish, that means the opposite. If everyone is saying that things are going to be bad and things are going to die, like Liberation Day last year, well, what I did on Liberation Day last year is I went all in. I don't like using that terminology very often, but I depleted my checking, depleted my savings account. Another time that I did that was during Rona of 2020. I bought a lifetime operational crash. So last year, yeah, I did go all in. Everyone was screaming, the market's going to die. The economy is going to die. America is going to die. Wrongo, it does the opposite, right? Like, straight up. When you have every single person screaming and ranting and raving saying, hey, the market's going to crash, the opposite tends to happen. Now, all the Wall Streeters kept saying, oh, 2026 is going to be friggin' awesome. Nobody knew the Iran war was going to happen unless, obviously, you are very much high up. No one could have ever known oil was going to break out like it did. So the thing about it is that everyone was talking about how 2026 was going to be awesome. Now everyone is talking about how there's going to be a slowdown in the chips in 2027. 2027 is going to bring a lot of the same result as 2026. We're going to have a collapse of capital expenditure. No, okay. 2027, mark my words, in my opinion, it's going to be a friggin' bull. It is going to be a bull rocket ship like you can't imagine. So look at this data right here. And I have actually looked at this myself and fact-checked this data. And I mean, first of all, this YouTube channel has 2.98 mil views. Not to mention, you can just Google this as well, too. But the pre-election year, average return, 17.8%. So what is made up in the election? What is made up in the S&P 500? Oh, technology companies. I'm a technology bull. So if the S&P on average goes up by 17.8%, that means that my profiles can theoretically double up, maybe even 150 to maybe 200%. That might be hard to really understand, but when you are invested in companies that are just going on a tear, it's like, yeah, you're getting, keep the numbers simple. You're getting 17% in the S&P 500. My profile could very well go up by 170%, 100%. Maybe, okay, maybe not 100%. Maybe 80, 70, 50%. That's a lot more powerful than the major indexes. It does come with a risk to reward ratio, obviously. And that's what a lot of people that buy the individual indexes will go ahead and say to you. That's what my good friend says to me. Me and him, we bounce ideas off back and forth. And it's always good to listen to other people. Don't be scared to listen to bears. I listen to bears. I'm a bull on America. I love my country. I'm a patriot. I'm also a veteran. The thing about it is that it's okay to listen to the other side. I listen to bears. I want to know what the bears think. I want to make sure that I'm not missing anything here. But let's go ahead and look at this, okay? Pre-election year. Let's go ahead and look at the previous election year, 2023. So this is the daily chart. Every single one of these candlesticks here is 1 day on the S&P 500. Let me go ahead and zoom in on here even more. Let me go ahead and hide my watch list. Okay, so the S&P 500. Obviously, this was December of 2021. This was January of 2022. We had basically pretty much the decelerating of big tech earnings. 2022, massive inflation, earnings for big tech was actually slowing down, and we basically went into a bear market. Not to mention we were in a recession, a textbook definition of a recession in 2022. 2 negative quarters back-to-back of GDP growth will give you a textbook recession. If you don't believe me, look it up. I actually was telling a lot of people this in 2022. They didn't really believe me. I wasn't making YouTube videos back then on the stock market, but yes, we were in a recession. It was short-lived, very short-lived. Now, the S&P 500. Let's see. So, S&P 500, let's go ahead and go to January, the S&P 500. Yeah, sure. Let's go ahead and use this. 385 we opened. 385. Remember that number, 385. All the way up to December. Let's go ahead and say the 29th of December. We're at 472 for 2023. Well, let me go ahead and pull up my handy-dandy price checker over here. What number did I say? Let's go ahead and keep it simple. 380 all the way up and over to the end of December. We had a Christmas clause rally. On the S&P 500, if you're going to be going on the charts, you're looking at a 23% gainer. Wow. Yeah. 23% gainer. Now, a lot of people may argue this. A lot of people may argue, well, Nightmare, we were theoretically in a gigantic cup and handle formation. We were basically in a crash throughout 2022. And we really didn't recover out of the crash from the highs of January of 2020 or December 2021, call the beginning of January 2022, pretty much up until the beginning of 2024. That is very factual. Okay, but you see, the way the S&P 500 works around data is it doesn't look if you're coming out of a crash or not. Because theoretically, if you had bought the S&P 500 back in December of 2021, you did not see a positive on your money until January of 2024. Oh yeah, you were in, especially if you were not buying the dip on the S&P 500 all throughout 2022 and 23, you did not see any money until January 2024. That is why a lot of people, believe it or not, they call the stock market a scam. Is because they're like, well, I just bought the S&P back in December of 21. It took me 2 years to see a profit on my investment. Hey, were you buying the dip? My philosophy is very simple. If you are a longtime shareholder of any asset and there is some type of global geopolitical nonsense crash, which we did have a lot of geopolitical events in 2022. The Ukraine-Russia war kicked off. The inflation was massively spiking. Federal Reserve raising interest rates. Massive, massive noise, right? It was a very frustrating year for me, but I'm very happy I stayed in the market. A lot of people got clobbered. A lot of people lost everything. A lot of people left the market. You got to be tough, and you got to do your due diligence. But if you're a long-term investor, my philosophy is very simple. You buy the fear, you buy the blood, you buy the dip, you pick up discounted shares for the future. And if you're a trader, well, you buy the fear, you buy the blood, you sell, you buy the dip, you sell the rip. It's pretty simple, okay? Look at where the S&P 500 is right now. Right now, compared to where we fell off from 2022. You're talking, okay, 480? Yeah, baby. Yeah, okay, yeah. No, the stock market is not a scam. You gotta do your due diligence. You gotta research this stuff. If you're buying major indexes, hey, bravo. If you bought major indexes all throughout 2022, you're up about 100 friggin' percent. How crazy is that? But if you were buying individual companies all throughout 2022, you are well over, hundreds and hundreds percent, okay? If you had bought Meta when it was below like $100, I actually did not buy Meta below $100. Very much wish I did. I ended up buying Meta very much later when it was recovering around $300-400. But I mean, still, if you had bought Nvidia back then, even AMD back then, if you had bought just anything related to the AI build out, you would have been up a lot more than where the S&P 500 is right now. Comes down to research and due diligence. So, on a closing note to today's educational video, I am funneling in an extreme amount of money into this market. An extreme amount of money. I actually did buy some more stock yesterday before the market ended up closing. I did post a video yesterday of what stock I did buy, and then I ended up buying more stock in the afternoon because the market was just beyond bloody. In the last 9 months-ish, about 9 months now, I have bought near $90,000 worth of stock. Near 90 grand worth of stock. Hard cash, no margin. 90K, and some crypto as well too. So let me go ahead and rephrase that to investments, because that's eventually what they are, investments. I'm loading the friggin' boat for next year, because I can already foresee next year we're gonna have inflation come down. We're gonna have the Iran conflict hopefully get wrapped up before this midterm election. We're not really going to have any geopolitical events. I don't foresee any black swan events. You're going to have President Trump basically like propping up whomever's going to be, pretty much thinking about running for president for the Republican Party. It's probably not going to be a shell shocker. It's going to be J.D. Vance more than likely. And it's going to be just, hey, propping the market up, propping the market up. And that's what ends up happening before the election year. It makes people feel good. So next year, there's already people talking about like the AI build out slowing down. I'm on the opposite end. I don't see it just yet. I'll talk about that more probably in another video, why. But I definitely made this video longer than I really should. But I mean, if you're new to the market or you're thinking about getting into the market, do your research, do your due diligence. The year before an election year, the market, the odds are in your favor. The odds are in my favor. It really is. So don't miss out on great life-changing opportunities to get you out of the financial matrix that we are pretty much living in, right? So good vibes all around. I'll see you all on Monday with a brand new episode, and have a great weekend, everyone. Later.